Now let's bring in our panel. And the first is Hilding Anderson, the head of retail strategy at Publicis Sapient, and Sucharita Kodali, a VP and principal analyst at Forrester Research. Welcome to the show. This is a retail-themed day for us here on the network, but I'll go to you first, Hilding. The future of retail seems to be e-commerce, direct-to-consumer. How have these discount retailers that rely so much on foot traffic transitioned over the last year?
Yeah, thanks, Tom. Sucharita, great to see you again. And I do think it's pretty exciting to see what they've done with digital. First of all, I think there are a lot of tailwinds happening in the discount retail space right now. So this is the multiple years of growth that we've seen from a lot of these leaders. We've seen new entrants from like Aldi and others come in and really try to shake up this space. And increasingly, we're seeing digital transformation being a key focus area as they look to accelerate that space. So specifically, we see with COVID a shift of spending away from restaurants and towards grocery. Some of that will snap back. We do think that there's a growing market for value-focused buyers, given the recession that we just came out of. And certainly the digital enablement of sales at a lot of these discount retailers is quite significant. So, one of the retailers, Dollar General, I believe, announced they were going to have curbside at nearly all of their 17,000 stores across the U.S. We're seeing similar patterns at a lot of the other discount retailers as well. And to some degree, this is actually following a playbook of Target and Walmart and others about how do you embed digital into that customer journey, drive more convenience, regardless of your household income, regardless of your city versus suburban versus rural segmentation, as more and more digital becomes infused in our core lives.
Yeah, that's not a bad, path to follow in Target and Amazon's footsteps there, as far as their digital transformation and the pickups that they've increased on. But Sucharita, if you look at this space, and we've seen a lot of the individual names, the stocks have rebounded solidly. Some are above pre-pandemic levels. Is this a story that's based on the liquidity and the willingness of the consumer to get back out there to spend, even though, we've lost a lot of jobs here? Or are valuations getting a little bit, rich here?
Yeah, it does seem a little bit strange because it appears that the market could be a little bit ahead of where the revenues actually are. Every merchant, even some of those in the dollar channels, certainly had headwinds through 2020, particularly when consumers were just visiting stores less. But at the same time, you see this enormous rebound throughout all of retail, including in the department store sector and with stores like Kohl's, which have struggled tremendously, not just in 2020, but even prior to 2020. And the questions that I have are, all of these merchants drew down lines of credit to compensate for their sales being off in 2020. They needed to still pay rent. They needed to still pay for shipping for their e-commerce orders. And the time is now in 2021 and beyond to actually pay that back. And what that means is that any profit that they do have, even when consumers come back to stores, it's going to go to paying down that debt and to paying off the money that they had to borrow in 2020. So I'm not sure that that these valuations are all that justified, because they're coming out of the pandemic in less positive of a situation than they were going into it.
Yeah, and I think Sucharita makes a good point here, Hilding. If you think about it, the expansion of the footprint of a lot of these discount retailers is continuing to expand. So they're continuing to invest in their business while they might handle inventory levels well and expenses well. Is this going to be a headwind for some of these companies coming out of this rally that we've seen? Or will foot traffic pick up enough to offset that?
Yeah, we do expect, of course, foot traffic to rebound largely to the levels it was before. But I think that there's this question around how do you optimize e-commerce profitability in a way that makes sense. And one of the things I think you can learn from Target, and I do think that the discount retailers are watching, is fulfillment from the stores. Target fulfills close to 80 or 90% of their e-commerce orders through the store itself, and they have over twice the profit margin of their direct competitors. I think if you look at that, that's going to obviously solve some of the some of the challenges on the profitability front. I think the other piece is they are actually expanding the pie somewhat, entering with smaller store footprints in a little bit more urban or kind of quasi-urban locations. And if they're able to make that stick and expand their core audience, I think, again, that'll be a key kind of tailwind for them looking forward.
Yeah, and Sucharita, if you think about this as the expansion here takes place, and we've seen a lot of businesses close over the last couple of years, even before the pandemic started, as this transformation went to e-commerce. But if you think about this moving forward, there was a UBS report out that 80,000 more stores are going to close in the next 3 or 4 years. Do you expect that to continue, or will you see these discount retailers kind of fight it off once again and come out as post-pandemic winners?
Well, the discount sector, with some exception, I mean, you're lumping in companies like Dollar General with Kohl's, and the dollar channel is doing well, but the department store sector, I think, is much, much more challenged. So there are even winners and losers even within discount. But that said, one of the things that the discount sector has, which isn't always, the best way to look at it, but it's driven by the socioeconomic demographics in the country. And unfortunately, we continue to have continued fragmentation. We continue to see the divergence between the wealthy and the poor. And so long as the lowest income demographics continue to grow in size, that their purchasing power is not increasing, those discount sectors will absolutely do fine, because those consumers don't have anywhere else to go. Those consumers are dependent on those retail channels. On the other hand, those 80,000 stores that we're talking about are not closing at, in the dollar channel. They're closing in the mall sector. They're closing with big box stores. It is all of those retailers that are targeting the middle class and the upper middle class, where those consumers are now shifting their share to e-commerce, that those stores are unnecessary. And not only is there a shakeout, but there's a reconfiguration. There's rethinking of the real estate in those stores. Do they allocate a lot of that space to in-store pickup or to essentially local inventory or micro fulfillment centers? Mm-hmm. That's really what we're seeing is the shakeout in sectors like apparel, sporting goods, toys, and some of these discretionary goods.
Yep. All right, great discussion to our panel guests. That's Hilding Anderson, Head of Retail Strategy at Publicis Sapient, and Sucharita Kodali, a Vice President and Principal Analyst at Forrester Research. Thank you so much.